All right, thank you for joining us. Let's get into our conversation now. Reactions on the impact of the MPC decision on asset repositioning have called for a reassessment of asset classes such as real estate investment, equities, fixed income, securities, and foreign exchange holdings. This process requires critical analysis and the need to adapt to evolving market conditions and policy changes if required. For more insight, I'm joined by the CEO of Valmin Capital and Partners, Mr. Tajuddin Olayinka. He joins me virtually now. Thank you, Mr. Olayinka, for your time. We understand that asset repositioning entails a strategic realignment of investment holdings to position for emerging opportunities, right? And from asset management perspective, I would like to ask you, let's start from there. What are the main concerns from the market regarding the MPC meeting outcomes?
Well, the main concern has actually been, having to reprice, assets, having to reprice the different securities that you have in the portfolio, having to move from one asset class to another asset class, or, reduce your holding in a particular asset class, and then move to asset class that look more promising. So it has actually been, more of a, moving from one point to the other, by way of, rebalancing the portfolio. So it's actually, the market is in a repricing mode. And so for that reason, you see, investors moving from either equity to, fixed income, or just reducing what they have in equity to increase what they have in fixed income because of the, high yield that is coming from that, that space. So it's actually, movement from one asset class to another. Not necessarily, exiting that asset class as a whole, but just reducing what you have there to increase what you have elsewhere, so that you can have a balanced portfolio and you can have a portfolio that can give you a good return, going forward. So that's the state we have now.
So how do you see this repositioning impact or influence on corporate strategies and planning? I think we also need to touch on that. So we understand, of course, there is a movement of asset class to another, but how is it likely to impact on decision making?
Well, it depends on what decision making you are looking at. If it is decision making from the point of view of an investor, of course, it's all about improving the yield they have or return they have on their portfolio. And if you are looking at the companies themselves, are also engaged in this kind of, they are involved in this movement from one position to the other. But in their own case, they hardly can move from one asset class to another asset class because they have a portfolio of products that they run and manage. So it's not going to be easy for them to move from one asset class to the other. But what they do, especially for those of them now that are having huge losses from foreign exchange gains and losses, so those ones are actually doing what we normally call the pricing of earning assets. So they will normally have to reprice their earning assets to be able to make accommodation for the rising cost, so that they can recover cost, at least reduce their losses in the interim. But of course, going forward, we have to do a lot of things to also put their businesses in shape, so that investors who are looking at those companies will see that yes, even though economy is going through challenging time, the companies are also doing things to make sure that shareholders or other investors do not suffer by being part of that, part of that business. So it's a realignment, across board, not only restricted to portfolio management, but also to those companies who also have to manage, portfolio of products. So it's repricing across board generally. They're repricing, even banks are also repricing loans. They're also repricing loans. All sorts of repricing going on. And so for this period, we'll see some kind of alignment and we'll see some adjustment here and there. So it's a general repositioning and general repricing of securities and other assets across board.
Particularly in the context of foreign portfolio investment. So what do you have to say about that? Because I understand that some investors probably may want to, because this is very, very crucial to how they position whether to hold at this time or whether to give it up. So particularly in the context of foreign portfolios, speak to that as well. How is it likely to affect movement of investment?
Yes, foreign portfolio investors are actually looking at where they have opportunities of higher yield, higher yield on whatever financial assets that they have to hold. They're always attracted to risk-free instruments, like treasury bills and federal government bonds. But over the last 1 year, especially since we entered into this crisis that we are into, currently, a lot of them have not been able to show interest. But the essence of hiking MPR by MPC is to actually stimulate this interest to make sure that they actually participate in this market. But is that participation coming so quickly? Yes, it may not come immediately, but they also have to see how best you are able to manage the exchange so that they can able to forecast their exit. Because no investor wants to come into a market where they cannot predict what their exit values, at least close to what their exit value should be. So yes, some of them will be coming. Don't forget also that some of these foreign investors are actually local investors who have offshore funds that will not be able to repatriate and use that one to take advantage of what is happening in the local economy. So some of these investors who will be moving in their funds to take advantage, but they will be more concerned with what happens to your exchange rate and to see how best you are managing that. Because of the system we have, even though the CBN governor said as at the time they had that meeting, we were $34 billion up in terms of foreign reserves. But don't forget also that foreign reserve, that $34 billion is already impaired. It's not accessible. They can't access it. They can only access, I think, going by the calculation of the past, they can only access about $3 billion there. So for that reason, we are it's more or less, we are in a balance of payment crisis. So they have to be sure that there is an insurer, standing by to actually bail them out if they have to exit, Nigerian market. But of course, I'd like to see some of them coming in, very shortly.
Mm. We understand that the current is CBN MPC rate, MPR, favors the financial market, other than any other sectors. So are there any uncertainties that could trigger, a kind of negative sentiment in the market?
I really don't think so. You see, like I mentioned earlier, the essence of hiking MPR is to stimulate, foreign inflow. And we saw this coming because we knew that, CBN or MPC was going to, hike rates. But the magnitude of that hike was not known to most of us. But what we knew then was that, when you see, a DMO issue NTB at, at a yield as close at, 22-23%, that suggests that for 12 months bill, that suggests that, MPR would definitely be a little above that. And so when MPC came up with that idea of 400 basis point hike, it was obvious that they were responding to what they had already signaled. So markets had prepared for that. Market knew that we were going to have a hike in MPR, and of course there is no way the federal government to be issuing treasury bill at 22% effective yield, and you will not see a hike in MPR. So market had prepared for that, and market had factored that in. That was why when the announcement was made, it only affected the market slightly. Market adjusted downward slightly, but the pricing had actually taken into consideration the fact that MPR was going to be hiked in a way. So across board there will be adjustment. Of course, the critical thing is, are those public companies that are affected by forest losses. But for these companies, of course, like I mentioned earlier, what the alternative they have now is to reprice their earning assets. You look at those assets that can earn them income and reprice them. And of course, for average Nigerian, that is more inflation. Until we now begin to see inflow of this foreign investments from these foreign portfolio investors, so that we'll see a better mix, and that will now begin to reduce the yield in the fixed income space, because it is when they come in that you see more reduction in the yield in fixed income space. Because no way, no how, they must come in, bring in dollars to buy naira. So that for that reason, we can see improvement in the yield in fixed income space. But that is not going to happen immediately. And of course, that is something everybody is actually calculating, either from the point of view of real asset investment or on the point of a financial asset investment. Everybody's doing repricing, and everybody is hopeful that eventually these foreign investors will come, and then of course we'll have a better position in the economy, because we cannot continue with high yield environment for a long time. Even government cannot sustain it. Having to cover out that huge amount of interest expense on monthly basis or on quarterly basis on NCB. So it's clearly everybody's hopeful that this will bring about improvements in the market and in the economy as a whole.
Okay, because of the high rate of the MPR, which is at 22.75%, ordinarily it seems that investors are going to be shifting focus to the money market, the bond market and all of that, because the yield there seems attractive than in the market. How is that likely to affect sentiment, investors' appetite in the capital market, the equities market specifically?
That is already taking place. In fact, that had even taken place before the MPC meeting. The moment DMO signaled to the market that they were going to be issuing treasury bill at a higher yield, more investors, some investors, particularly institutional investors, those who are savvy, who understand the market, had moved ahead of that. So some of them are already in the fixed income space, taking advantage of that. You don't have to wait for MPC announcement before you take that decision, because they knew ahead of time that we were going to have that hike in MPR, and for that reason, some of them had moved into treasury market. Most of them in treasury market, because that's where they have some kind of assurance, and of course because of the 22 or 23% effective yield in that space, it attracts a lot of them. So that for now we are feeling that impact in the equity market. You will see that for quite some time now, the daily trade, the daily value has reduced to about 6 billion, 5 billion naira and thereabout. Whereas in the past we could do as much as 10 to 15 or even 20 billion naira. That has come down. Yesterday we had about 8 billion. We will see improvement, because some will leave, some will come. There are some traditional investors that no matter what happens, no matter what benefit they can get from the income market, they won't leave equity. These are traditional investors that are equity prone from time to time. So some of them will stay there. But those who want to move around and benefit from higher yield in that fixed income space, they will do that and move quickly and take advantage.
I'm going to allow you to go now, Mr. Yes, pardon me. I'm going to allow you to go in a moment, but just finally, before I let you go, talk about the changes, inflation and currency fluctuations, how it influenced the consideration for asset repositioning and strategies as well, particularly for long-term investment planning. So what is the impact? How do they position? Because there is exchange rate volatility and, of course, there is inflation. Speak to that before I let you go.
Yeah. Inflation is an issue that nobody can take away once you have economy in this state. Many investors, those investors who understand the market, especially portfolio investors, asset management companies, and those who have opportunity to actually manage assets for some retail investors, have actually been taking position of that. Anytime that's the beauty of equity market. That market has a way of beating inflation from time to time. Even though in the immediate to near term, you may not see that capacity, but in the short to medium term, you see an improvement, and you see adjustment across board. You see even public companies able to adjust to variability of cost and cost pressure in the short run to be able to stay afloat. So that is why most investors who know that inflation is an issue and exchange rate is also an issue, are actually doing whatever they can do, or whatever that is possible for them to do to be able to secure their position. So clearly we have seen adjustments and movement across board. So it's not really a bad situation for investors, because no way, no how they must be able to recover costs and, of course, be able to play safe against inflation.
All right. A good place to live in. Thank you so much for your time, CEO of Varmin Capital and Partners, Mr. Tajudeen Olayinka. Thank you for coming on Business Nigeria.
Thank you. It's my pleasure.
It's time to look at the stock market now, and of course,